Hello, hustlers. I wanted to talk about GME. Obviously, that's a main topic going on in a lot of different forums and people's minds and on the news channel. So I want to bring this to your attention. This is an interview of a former SEC lawyer on this Reddit situation, and let's hear this. And then I wanted to draw some parallel with something else, and then we can go from there.
SEC should actually suspend trading altogether on GameStop. Let's bring in Jacob Frankel. He's a former senior counsel for the SEC's enforcement division, now a partner at Dickinson Wright. Jacob, great to have you as always. What in your view is going wrong here? This is just a group of investors on a social media site.
Well, there's nothing wrong with the free speech, but what we really have here, in my view, is a kids gaming stock that needs adult supervision.
Okay, this is SEC approved stock that's in the secondary market. Anyone can buy, anyone can sell. Why do you think, oh, that's a kid stock, now it's need adult supervision? No subjects, it's just fluff.
And I think that adult supervision is probably an SEC trading suspension. Everything that's going on.
Trading suspension without any background. Oh, it needs trading suspension. Because people are buying.
Is certainly going to invite an SEC investigation. The whole purpose of a trading suspension, which is different than a circuit breakers, is the SEC has the administrative ability to suspend trading when there are questions about the accuracy of publicly available information.
Okay, so what's wrong? Accuracy of the publicly available information, if it's wrong. So the publicly available information is put out by GameStop because those are the true insiders. If they put some wrong information, that's publicly available information, and if that's a false set of information, yes, you can go on halt because hey, this is not publicly available information we are using, individual investors are using, retail investors are using. How is that analysis comes out of someone else digesting the publicly available information that's available for everybody, including the short sellers who short sold based on the same set of information. And what this guy is selling is completely wrong.
And you have this competing dialogue as to what really is going on at the company and what's motivating the trading in the stock, or the shorts and the longs. But also, one of the bases for a trading suspension is a possible or potential stock manipulation.
Okay, he's talking about stock manipulation. Who is manipulating? Is it the short side? He's not even talking about the short side. If that's the case, then they should just go after the hedge fund. They're not even saying, hey, they did anything wrong. It's as if it's their birthright to short, and that's fine, to the tune of 130-140% of the outstanding. That's fine. But hey, you're manipulating by buying. Buying is, I'm just putting my cash or on margin and I'm buying. That's it. That's the safest position. That's like the plain vanilla buy. There's nothing complicated. What's wrong here?
That would be something that the SEC would look at. But again, when you have this level of volatility and the circuit breakers are not sufficient or not accomplishing their objective, that really is the next option. And just to be clear, a trading suspension is not permanent. It is strict. It is a 10-day trading suspension that is within the SEC's statutory authority, and it's something that the SEC wielded 35 to 40 times in connection with COVID-related stocks.
Mm-hmm. How do you prove market manipulation? I mean, how do you prove that anything that anybody is saying on Reddit or any other site for that matter is wrong or done with an intent to manipulate the stock price? And why is this different from a bunch of investors on an Apple thread talking about the stock of Apple? It's just Apple's a much bigger market cap, doesn't move as much.
Well, Melissa, that really is a great question. That's exactly what the SEC would look at. And what it would look at is it will align what is being said, the accuracy of what is being said, and who is doing the trading, and is there some type of, big word from the last couple of years, collusion within that trading. But when we're talking about manipulation, what we're really talking about from an investigative purpose is that the SEC...
There is no substance. You keep saying manipulation, but how is it manipulated? On what basis?
We'll look at whether there's actual active trading for the purpose of raising, or in the case of the shorts, depressing the price of a security for the purpose of inducing others to buy or sell that security. That's what the SEC is going to look at. It's a very time-consuming process. It's kind of stuff I worked on when I was at the SEC and actually found very challenging and interesting, because you really then are getting into the motivation, the communications, the timing, and the information. And in this day and age, everything's fast.
Well, let me ask you this question, and I guess I'm just going to play the role of devil's advocate, and from the perspective of what I've read on this Wall Street Bets thread, how is this any different from a couple of hedge funds or a few hedge funds saying that they're going to go short a stock? They've communicated via email. One goes on CNBC or on Twitter and states that they have a short case, puts out a YouTube video. Isn't that the same? Isn't that?
Finally, she had the guts to tell, going on CNBC and telling this, and this is exactly what's happening. Every one of those big firm investment managers or chief investment officer or someone would come and do exactly what she is telling, and that's the point.
Manipulation, except on a bigger scale. These are bigger shareholders. They have bigger voices. They're the quote unquote smart money on Wall Street. They can get away with it. That's not manipulation. No,
and certainly hedge funds can participate in manipulative activity. There's nothing that that really puts one institution over a series of individuals. When we talk about stock manipulation, I mean, I remember back in 2001, the SEC brought an enforcement case against a 15-year-old high school.
He's not even answering the point. When big boys do, that's stock manipulation. Is that okay? He's like, oh, we're not talking about that. We're talking about the 15-year-old boy getting jailed because he manipulated. Like, it's out of context, and he's just trying to scare people that, hey, a juvenile got arrested because of stock manipulation. You might, so you better be. So it's all tactics, basically, to steer people away from investing.
Student for stock manipulation. So it's not that there's any particular characteristic, and certainly the institutions do it. What we're really talking about here is the conduct in connection with this stock, which is experiencing such volatility, and the circuit breakers don't seem to be addressing it satisfactorily.
So the circuit breakers are in effect there to to protect investors and also protect the market participants. Most likely not on the upside. I don't think there is any kind of rule on the upside. There's always a uptick rule. If you're a short seller, right, it has to tick one tick up before you can just short it, and if it drops 7%, there's a 15 minutes halt, and if it drops like 20%, there's like a 1 day halt or something like that. It's all on the downside, not on the upside. So he's just trying to just make it up. That's definitely not true. It's not catching as if the technology is not sufficient enough, and these guys are like hackers trying to manipulate that. That's not true. People are buying. The stock is going up, and I'm gonna show another one from Jim Chanos, who's also a short on Tesla stock, and see how that goes. Let's figure, watch what he says, and then we'll go to the other video.
What I'm saying is that is an option, but even if the SEC were not to do it, and granted the SEC tends to use trading suspensions almost exclusively in the small cap space, but the fact is there is conduct here that certainly has the SEC likely already investigating, and in all likelihood there's also a parallel criminal investigation, because ultimately, if you get down to it, you marry up the fundamentals of this company with the stock price, I think there are a lot of questions. And
so how does SEC know about valuation? They don't get into the valuation. They are only regulators trying to make sure the market is a free market and it's running by the rules. No one is manipulating. And if he's talking about GameStop fundamentals, then obviously he has to have certain parameters laid, and then we can just go refer back. How is he even going to talk about the fundamentals? Because we are all betting on by the way, everybody participating in a stock market is by definition speculating, because how do you know what's going to be the next quarter. How does anyone know? It's all projection. It's all projection, and then you're betting on the growth of the company. So that's speculation. So there is no way that saying GameStop has no fundamentals. It might not have historically. It might not have right now. It doesn't have. Probably doesn't have. But there are other things, right? They're just repositioning themselves to be an online retailer, much like Amazon. They have a new, I think the Chewies.com founder sold Chewies.com for several billion dollars. He is in the board. He has a 13% stake. That's a great catalyst. He's gonna, and then there is a partnership with Microsoft, and they're doing a lot of different things. There are a lot of catalysts. So how does even this guy come here and say no fundamentals? And CNBC is constantly telling no fundamentals. It's not worth $20. No fundamentals. It's speculation. Yes, speculation. Everything is speculation. Now watch this. There's another video by this was like back in April, and this is Jim Chanos. He's like the biggest short, or at least his biggest position is the short position on Tesla. My question is, this guy is shorting Tesla, and he is getting hammered because everybody is buying. Like Kathy Woods is buying, and then a lot of institutional funds are buying because they believe in Tesla. So what's happening to this guy? He's getting crushed. So watch what he says.
Stock gets creamed, like some of the energy ones have done, and like Luckin has done today, where you've covered it all. The other is when a stock goes parabolic, like Tesla did over the winter. Are you still short that? And how did that impact your thinking on your positioning?
So Tesla, and we told clients in January, February, that the 3-month period, sort of November, December, January, was one of the craziest periods I've ever seen in my 40 years on Wall Street. And if you remember, and I know Josh saw some of this stuff, and maybe some of your other panelists, retail for some reason came pouring into the market in individual names and individual stories in a way we haven't seen really since sort of January, February of 2000 at the end of the dot-com boom. And we saw the parabolas, we saw the Teslas, the Virgin Galactics, and others. And we saw it in the data of retail trading at E-Trade and options and Robinhood and so on and so forth. And I had not seen, that was the one thing that's been missing in this bull market in the 10 years, was just manic speculation by individuals. Well, sure enough.
Okay, so this guy says there was like 10 months back. Okay, this is a Tesla, it's not even with GameStop. He's talking about more speculation. Okay, so why are you talking about speculation right now and then trying to go after the small guys? That's not true. And listen to what he says right now. He's the biggest short.
By January, February, we had it. And we saw these stocks go parabolic. And if you're parabolic and you're short, obviously your position's getting much bigger. So in situations like that, if we like the name, like we like Tesla, we will have to cover some if it goes through our risk parameters, but then we will sell it, even back down if we want to keep a maximum position. Again, one of the challenges of the short side is that you get bigger when it goes against you and you get smaller when it goes your way. We are still basically maximum short Tesla. It's still one of my favorite positions. Nothing's changed in my viewpoint here. This is a car company. It will lose money again this year. What I find fascinating about Tesla is that the 2021 estimates, which track the stock on the way up, are now being cut dramatically. I think Tony Sacconaghi, who you know, cut his 2021 adjusted.
See, this is what they do on CNBC. They come here and they have this big ad running here which says, hey, Tesla is going to go down, parabolically it went up, a lot of speculation, there is no fluff, there is no fundamentals, it's just a car company, and wait, this is going to go down. And this guy, whoever the analyst is, he's projecting from $18, he's revising his estimate to be $11. It's going down. It's my biggest short. I love this position. It's a short. It's going down. What did he do? He just influenced so many investors to sell Tesla, short Tesla, because he has a short position. So he's trying to advertise his short thesis. Now, how is this different? How is this different from another analyst, an individual investor, a retail investor on the main street, trying to post on a forum that anyone can see? It's not even on the closed doors. It's open. This is open. That's open too. Wall Street Bet. Someone goes and put something out there. How is that different? How is that manipulation? And this is not a manipulation.
EPS number yesterday from $18 to $11. I mean, that's not affected by the virus. So, I mean, we're seeing big number cuts in this company. They're building 2 plants. They finished China. They're building Berlin. They are increasing capacity, I think, exactly at the wrong time. And if you know anything about manufacturing economics, you know that units, you also need to cover your overhead if you're building more and more capacity. And if you're not producing at 90+% of capacity, you're basically not going to be profitable.
But from a risk standpoint, you did cover some of the Tesla short when your position got larger because the stock had gone parabolic, as we said?
Yeah, we have a 5% limit on our funds. So if anything goes through 5%, we have to cover. But on the other hand, we will add on the way down if we still like the position. And it was a very constructive story, and that was a company called Valiant Pharmaceuticals that went from 130 to 260 on us. And we had to start covering stock at 180 and 200.
There you go. So this guy says they will cover. They know their risks. So why are you crying foul right now? Because it just went against you so much that you bet your farm, you went 120%. That's insane. That's risky. So this guy, he says, we have a 5%, right? That's our risk parameter. We don't want to take anything more than 5%. That's smart, right? That's diversification. So any one position is not taking you down, even though, the short position is inherently is very risky than your long position, because longs can only lose the maximum investment. On the short side, it can just immediately parabolically go, and you don't even have, like, what if you cannot even cover? And that's exactly what's happening right now. And this stupidity on the hedge funds part and the short sellers part, that they went above and beyond 120%. They were manipulating the market. There was only 100% in circulation. They wanted to go and do 120, 130, 140% short, which is insane. Why are these guys not talking about those guys? And why is this former SEC lawyer or the legal panel, he's coming now and he's saying, oh, these investors buying, they're manipulating. It's the other way around. Again, thanks for watching this. Again, this is for informational purposes only, entertainment information purposes only. I am not recommending GameStop. I'm just venting out my frustration as to what's happening and what these guys are trying to tell. But do your due diligence, invest for a long term, and don't forget to smash the like button and write comments so YouTube can help me. Thank you.